The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. TGIF. Happy Friday to you. Welcome to another edition of Breakout Investing on TFNN. The number to use if you want to call me, talk about this market, feel free to do so. 877-927-6648. You can catch my program 5 days a week now on TFNN from 3 to 4 Eastern, just in front of the Tom O'Brien Show from 4 to 6. If you can't listen to the show live, head over to iTunes. You can get it as a podcast, and don't forget you can listen to all TFNN programming on your smartphone. Plug those earbuds in, type in TFNN.mobi, TFNN.mobi in your smartphone browser, and you can listen to the stream that way as well. Don't forget to check out Tiger TV on the homepage of TFNN.com. The show is carried live every day on Channel 1. It is archived on Channel 13, and if you watch Tiger TV, you can see charts that I'm going over on the program, and you can watch Tiger TV on your handheld device as well. All right, let's check in on the markets here. NASDAQ Composite up near its session high, up about 15 points or so, 0.5%. to 3,068. Still a little bit concerned about this higher volume decline, this higher volume reversal that we saw earlier this week on Tuesday. Not sure this market is out of the woods yet in terms of a little pullback here. And I say that because volume today is light. I was hoping we'd see a good strong day of accumulation in the indices, considering we've got decent with about 50 minutes left to go in Friday's session. But NASDAQ volume right now tracking pretty close to what we saw yesterday, which was 1.36 billion, very, very light. New York Stock Exchange volume has been, super light. If you think NASDAQ volume is light, well, it's even lighter on the New York Stock Exchange, down 10% or so from what we saw yesterday, which was 588 million. So low volume rally today. Investors, I guess, a little bit excited by this letter that Fed Chairman Ben Bernanke apparently wrote to California Republican Darrell Issa. He's the head of the House Oversight and Government Reform Committee. In the letter, Bernanke said there's room for the central bank to take more action. Now, there's really nothing new there, but his comments in the letter did come after the some recent economic data showing strong retail sales. His views haven't really changed dramatically despite some decent economic data recently. So this letter was written, I believe, after the release or after the last Fed meeting. So investors liked the sound of that, and we've got a little rally in the market here. NASDAQ Composite, again, up 15 points to 3,068. The S&P 500 also near its session high, up 7 points, also 0.5% to 1409. And let's check in on the Dow Jones Industrial as well, trading in the upper half of its range as well, up 78 points right now, 0.6% to 13,135. Let's check in on the Russell 2000. We're kind of waiting for a little breakout in this index, but I'll tell you what, after Tuesday's reversal and close near lows, that is looking less likely at this point, but it's still possible. The Russell 2000 lagging a little bit today, up 2.5 points, 0.3% to 808.53. Let's check in on the VIX here. The VIX had been in rally mode for several sessions in a row. Actually had a 4-session winning streak headed into today, but it is down about 3% today to 1548. So this VIX tends to work in inverse fashion when you have the VIX rallying, you tend to have general market weakness, and when you have the VIX weak, you tend to see the market rally. So decent day for the market. Again, volume on the New York Stock Exchange and NASDAQ tracking a little bit lighter than what we saw yesterday, which was very, very light volume. Let's check in on bond yields as well. The 10-year note, this is a chart of the 10-year note after 5 straight days of softness in the 10-year yield. It is up a little bit today, trading at about 1.68%. 1.68%. The 10-year note and the 30-year as well, working on a 5-session losing streak going into today, and the 30-year is higher today, up at about 2.79%. All right, taking a look at some story stocks. We talked about Hanes Celestial yesterday. Good follow-through in Hanes Celestial today. Let's take a look at the stock, up another 3% to $69.90. Hain, every once in a while, a company's going to come out with, really strong earnings that's going to turn a lot of heads. And, the numbers were pretty good at Hain. Their earnings were up 31% to 47 cents a share. Sales were up 22% to $350.8 million. Operating margin increased to 10.3%. And they also announced an acquisition that, instead of being dilutive, is actually going to be almost immediately accretive. They acquired several brands from UK-based Premier Foods for a little over $300 million. Company said it's expected to add about 25 cents to 2013 earnings, and short interest had been on the rise in this stock in recent weeks. So a little bit of short covering yesterday, but some good follow through today. So this is the real deal. Hanes Celestial Group, real solid earnings, and good to see follow through in that stock today. Hanes Celestial has been, growth through acquisition is nothing new for the company. They're taking advantage of growing demand for organic products, and that is exactly what they do. So Hain having a good day today, good follow through from yesterday. Let's check in on shares of Apple. Apple was soft early in the session, but it has turned around nicely. It's off its highs a little bit, but still up $1.91, 0.3% to $664.54. Apple's share of the smartphone market was almost halved in the second quarter to 10%. Buyers are waiting for the new iPhone. That is widely expected, I believe, September. All these dates going on. It's hard to keep them straight. I think it's September 12th. Is that? But that's when the Fed is meeting too. So anyway, they have an iPhone introduction coming up in September. Samsung kept its lead in the Chinese smartphone market with a share of 19%, down slightly from 21% in the first quarter. So Apple hanging in there. Again, same with the broad market. Apple did have a high volume reversal earlier this week on Tuesday, which tells me that the stock is probably ready to base and consolidate gains here, but nothing is going to surprise me in this market. It was a bearish move for the stock on Tuesday, and we could look back at that day and say, well, that's the time when a new consolidation started for Apple. I'm currently long the stock for my Ultimate Growth Stocks model portfolio, and don't feel the need to take profits and close the position quite yet. I'm going to wait for meaningful signs of institutional selling in Apple before I take partial or full profits. And I'm not going to sell just because one day of weakness on Tuesday. Give this one a little more time to work. Let's take a look at shares of Amazon. Amazon outperforming nicely today. Had a couple opportunities recently to buy Amazon. You had a swing point back here in late June, early July, over $230.50 a share. It broke out over that swing point, and then it broke out recently over $240.74. But right now the stock is up another $4.62, 1.9% to $245.82. This is another name that I'm long in Ultimate Growth Stocks. So model portfolio is really ramping up, and I've been patient, giving good high-quality names time to work, and I've got some good outperformance in there. If you want to take a look at a 30-day free trial to Ultimate Growth Stocks, you can do that anytime right on the homepage of TFNN.com. Just you can see my name right on the homepage there, Ken Shreve's Ultimate Growth Stocks. You can also click on the newsletters tab right on the homepage, and then you'll find me in the investment newsletters section. So good day of outperformance for Amazon today. The company's having a press conference in Santa Monica, California, just down the road from me on September 6th. It's widely expected we could see a new version of the Kindle Fire tablet. Also earlier today, Amazon said it's going to offer more TV shows on its Prime Instant Video product through an expanded agreement with NBC Universal. Amazon now offers more than 22,000 movies and TV episodes. So some interesting news out of Amazon today. We'll likely see something new with the Kindle, again, at a press conference in Santa Monica on September 6th. So Amazon, just another large cap tech name here in the NASDAQ 100 that is acting quite well. All right, I see that earnings report from Madison Square Garden. I mentioned that at the end of yesterday's show. Big move for the stock today. It actually hit an intraday high of 44.75, but it has reversed. Still has a nice percentage gain today, but it is trading near its session low. So longs can't be happy about that price performance today. I am not long this stock, but it was an incredible quarter from Madison Square Garden. Right now, up $1.61, 4% to 41.86. A lot of volume in the stock today. Earnings were up 236% from a year ago to 37 cents a share. The estimate was for 22 cents. That was a 15-cent beat on the bottom line. The sales growth was even more impressive. Sales were up, let's see here, is that right? I may have written that down wrong, but sales came in at $332.9 million. That was about $60 million above the consensus estimate of $277 million. So let me get that year-over-year percentage change on sales. And, sales were up 42%. 42% to $332 million. So I think I read that the New York Rangers were in the playoffs for quite a period of time. They were able to sell more concessions, but really solid quarter from Madison Square Garden. Let's also check in on shares of Eli Lilly. Stock's having a good day today. Another name here that is trading well off its high, though. Shares of Eli Lilly hit an intraday high of 45.01. Stock right now trading at 43.70, up 3% on the day. Eli Lilly said a potential treatment for Alzheimer's failed to reach its goals in 2 phase 3 studies, although data from both studies showed signs that the drug did slow cognitive decline in patients with mild to moderate cases of Alzheimer's. So the stock was really up big earlier in the session. It is trading near its session low, but still up 3% to 43.70. All right, check in on shares of Watson Pharmaceuticals here, too. Watson Pharmaceuticals having a big day today, up near its session high. Good technical breakout in heavy volume. The stock is up $4.57 today, 5.8%. This is the last holding that I'll talk about today in my Ultimate Growth Stocks model portfolio. Watson Pharmaceuticals having a very good day today. The company got FDA approval for a generic equivalent of Endo Health Solutions Lipiderm Pain Relief Patch. So a lot of buyers and shares of Watson Pharmaceuticals. Happy to see that, no doubt. All right, folks, headed into the first break. Thanks very much for tuning in to Breakout Investing. We'll be back in about 3 to 4 minutes. Ken Shreve with you. Right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
you take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Market's performing pretty well today, considering the U.S. dollar index is higher, around 81.60 right now for the U.S. dollar index, up 24 ticks, call it about 0.3%. Let's check in on the UUP. This is the PowerShares Deutsche Bank U.S. dollar index bullish fund. You can see here, firming up at its 200-day moving average, a decisive break below the 50-day moving average for the UUP a few weeks back, but firming up at the 200-day moving average here. So we'll see if that 2236 is a floor for the UUP right now. But UUP is up 6 cents right now to 22.41, just holding above that 200-day moving average. Take a look at the U.S. dollar index itself. And this is this is a chart as of Thursday's close. So we'll see that the Greenback index decisively took out its 50-day moving average earlier this week, and still holding above its 200-day moving average at 80.49. So we'll see if it can hold that longer-term support level. Taking a look at crude oil today, not much movement, down 0.1% to $96.15 a barrel. Gold for December delivery added 10 cents to $1,672.90. Had some other earnings reports to go over today. Let's take a look at Salesforce.com. Probably one of the more polarizing stocks in the market. This is an enterprise cloud computing play, one of the pioneers of software as a service. Instead of buying prepackaged software, you access software on the internet, and that's what Salesforce.com does. A pretty wild day of trading for the stock, but an impressive recovery after hitting an intraday low of $140.77. CRM is now trading at 148.06, up $1.29, about 0.9%. Salesforce.com reported earnings of 42 cents a share, up 24% from a year ago. Good top-line growth. I said yesterday that CRM quarter after quarter after quarter seems to deliver sales growth of better than 30% year over year. No different this time. Sales were up 34% to $731.7 million. Their outlook was just okay. They actually guided earnings in the current quarter a little bit below estimates, but full-year guidance mostly in line when it comes to revenue guidance. So there's a lot of support out there for this stock. Let's take a look at a weekly chart for Salesforce. And bottom line with Salesforce is people saying, well, do you buy it now? This is a base building stock. It's a stock that is in the middle of a consolidation, trying to get back to a prior high here of 164.75, but not clear to me that institutions are back on board here and busily accumulating the stock. So we'll see if Salesforce is going to have to prove itself a lot more. This has been a big winner in recent years, and not clear to me that this is ready to technically break out. So even though it's a growth stock that has a lot of characteristics I like to see, I'm looking elsewhere at this point for long opportunities. Autodesk, not a great day at all for this stock. It is down 16%, almost 16% today to $30.07. Autodesk is a architectural and engineering software maker. The earnings were not that great. The company lowered its annual sales forecast and said it plans to cut jobs as it restructures to focus on cloud and mobile computing. The actual numbers at Autodesk, profit was up 9% to 48 cents a share. Sales growth has been decelerating for several quarters in a row. It did it again in this quarter, only up 4% year over year to almost $569 million. Take a look at Mentor Graphics, MENT. This is an interesting company here. We'll look at the daily chart first and then to the weekly. After early strength, it's trading in the bottom half of its range now, but still up 14 cents to $16.38. This is a chip design software company that earnings were up 91% from a year ago to 21 cents a share. Sales up 13% to almost $241 million. The company reported strong revenue gains in its system and software business. You can see the stock has been in rally mode, and the weekly chart for Mentor Graphics is actually pretty bullish here. You see here I drew a trend line, and still could be in the early stages of an upward move here. Really, when you're looking at growth stocks, you want to buy the best quality stock in an industry group. I would call Mentor Graphics a good stock, but not a great stock, and you really want to be in the cream of the crop whenever possible. So I am not long Mentor Graphics at this point, but decent earnings report, decent chart. We'll be right back, folks.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. About 25 minutes left to go before we put the finishing touches on another week of trading here. Right now, the Dow is outperforming a little bit today, up 96.7% to 13,153. The NASDAQ and S&P 500 kind of moving in lockstep here. S&P 500 up 9 points to 1411, and the NASDAQ composite up close to 19 points to 3,072. Very similar percentage gains for both the NASDAQ and the S&P 500. So definitely a lot of encouraging action today in individual Stocks, does it make me more bullish? Well, not necessarily, just because there's not much juice behind the move today. I think the higher volume decline seen in the indices earlier this week on Tuesday could eventually mean something. But as I've been saying repeatedly on my show, I think I'm really not expecting a major pullback here after 6 straight weekly price gains for the S&P 500. We could probably come in 2 to 3% and just get a little bit of a shakeout to work out the excesses. But I'm still optimistic that we're going to see more money come in from the sidelines between now and the end of the year. Too many good-looking stock charts out there. That's my general take on things, and certainly a lot of big investors may not be putting money to work in this market, but they're certainly not going short either. And it's just a tough environment to be short when you have the possibility of pretty significant action, not only from the ECB but maybe the Fed as well. China, who knows what's going to happen over the next few weeks. But tough to be aggressively short here. All right, so going over some earnings reports. One other good earnings report today. Not a stock that I think is buyable here, but Aruba Networks had a decent quarter. Earnings were only up 6% to 18 cents a share. This is a Wi-Fi equipment maker. Sales up 22% to 139.3 million. Big gap up for the stock today. It's up 14.5% to 1938. It is back above its 200-day moving average. But Aruba, I don't know. I mean, I still look at this as a stock that is still kind of deep inside a base here. It's still about 24% from a 52-week high, so it's going to have a lot of overhead supply to work through if it indeed starts to head higher. We'll take a look at a weekly chart here, and you can see it was a $36 stock a little more than a year ago, and has been beaten down mercilessly, and starting to see some accumulation here, but the issue here is overhead supply. When a stock is this far off its high, it's not an easy road back, especially from people who bought the stock as it was going down. There's some people that bought at 30, some people that bought at 25, and as it works its way higher, this overhead supply is going to be seen from people just selling to break even on their earlier investments. So that is sort of a quick lesson on what overhead supply means, and I think Aruba Networks is definitely going to face that. Economic data today, not much, but we did have durable goods orders for July. Orders for big-ticket U.S. items jumped 4.2% in July as demand for planes and autos surged. Excluding transportation, orders fell 0.4%. Some interesting stocks here. Let's take a look at limited brands. Decent volume in limited brands today. This is a well-run retailer. They own the Victoria's Secret brand as well as Bath and Body Works. You have a cup with handle pattern working here, and a potential breakout taking shape over $50.75. That would be the swing point, the high set right here. So you have a handle area forming here, but I'll tell you what I don't like about the handle area: the erratic trading. Usually when a handle area forms in a cup with handle pattern, you'd like to see kind of tight, orderly, non-volatile trading. A little bit wide and loose action here. You can see a big reversal, finish near low here, finishes near its high here, another reversal here. So kind of wide and loose price swings in this handle area, and there's also a lot of volume. Another characteristic you want to see in a handle area is light volume. You want to see as a stock approaches a former high, which is what limited brands did here, as sellers get shaken out of the stock, you want to see kind of quiet, orderly trading, and you want to see quiet volume as well. So this, after all that, is a pretty flawed handle. Still, sometimes breakouts from flawed handles can work, and not out of the question if more money continues to come in from the sidelines here, limited brands could attempt a breakout over 50.75, and that would be its swing point right here. Today, the stock up 2.2% in pretty nice volume to 48.84. We've been talking about the hard disk drive makers, not to chase Western Digital and Seagate. Wait for a handle area to form. And you know what? You may be getting a handle area here in Western Digital. The stock is up 13 cents today. It was working on a 4-session losing streak going into today. Only up 13 cents today to 43.61, but kind of a good low volume pullback here. We'll keep an eye on Western Digital for a breakout over 45.94. That would be the high point in the handle area here set last week. So the swing point 45.94, it's at 43.61. Rather than anticipate a breakout here, I would wait for a heavy volume move over that swing point. It hasn't happened yet. It may not happen, but if it does, you'd have a good solid technical breakout. Take a look at Movado Group, MOV. This is not a widely known name, but it is a pretty well-run company here. They report earnings next week, as a matter of fact, and you've got a nice heavy volume breakout for the stock today. Shares of Movada up 3.7% to 28.78 ahead of earnings. Movada, let's see here. They report earnings next Tuesday. This, of course, is a watchmaker, so this stock is acting well. A nice little technical setup here. Good day of outperformance. The issue here, you generally don't want to buy a stock so close to earnings. Again, Movado Group is a well-run company. It's a fairly small company, market cap less than $1 billion. It's not the most liquid of stocks either, 172,000 average daily volume. But working on 3 straight weekly price gains and only about 4% from its 52-week high. Good track record of growth, strong growth prospects, reasonable valuation. So wouldn't be surprised to see decent numbers from Movado Group next Tuesday. Let's check out CLMT, Calumet Specialty Products Partners. Kind of the name of the company is a mouthful, but they make specialty hydrocarbon products. Big yield here of 8.7%, and a nice move for the stock today, up 64 cents, $2.64 is a 2.4% gain to 27.66. You had a recent breakout over 25.62. 25.62 was the swing point here back in early August. So it broke out there, and then it broke out over this recent high of 27.74. So it has made a big run. I would have preferred to see the ideal buy point was at when it broke out over 25.62. I'd be cautious of chasing the stock here, but it's a high-yielding stock where you're getting strong price performance to boot. So it's an interesting stock here that is outperforming. And let's take a look at some good follow-through for Regeneron Pharmaceuticals. Nice breakout for the stock yesterday, over $142 a share. It is up another $2.86 today, 2% to $145.64. This is a drug maker that just turned profitable. They make one of their key drugs treats age-related macular degeneration, which is an eye vision disorder. But Regeneron, good follow-through today. That's ticker REGN on the New York Stock Exchange. Another drug maker, been waiting for a breakout in this name, and we finally got it. Cubist Pharmaceuticals, big move today, up $1.21, 2.7% in strong volume to 45.65. The breakout here was over 44.57. So this one still does not look extended to me. Again, you don't want to chase a stock when it moves 4 to 5% past a swing point. 44.57 was the swing here. That was again earlier this month, and at 45.65, it's only about a little more than a buck past that swing point. So still within range here. I would consider Cubist a bit more of a speculative name than Regeneron. If you're really looking at institutional quality stocks, I think Regeneron would fit the bill better than Cubist. Cubist is definitely a good company with a good chart, decent fundamentals, but market cap of $2.9 billion. If you want to pick between the two, I think Regeneron would probably get the nod here. Let's also check out shares of Michael Kors. This is another big mover today. You can see all the stocks I'm going over here, all these growth names that are just they're acting right. And if you're looking at a market that is about to roll over. You probably wouldn't see this many growth stocks flexing their muscles. So I think that's a good argument in the bull favor here. More money being put to work in Michael Kors Holdings today. Stock is up $2.29, 4.4%. to 53.96, and you had a big gap up. Again, people afraid to buy gaps up in price, and this is when I bought Kors on this gap up in price around $48 a share. Now trading around 54, so got a little cushion in it. I'm going to be able to give this one room to work. It definitely has the look of an emerging leader here. And let's go ahead and take a look at a weekly chart from Michael Kors. And I've shown this before, but after a huge move for the stock, I mean, this is just a picture perfect technical breakout here. And to me, it doesn't look like the stock, even though it made a big move last week, it's still in the early stages looks to me like it's in the early stages of a breakout here. So Michael Kors, another growth name, acting very, very well in this market. Take a look at SNI. This is Scripps Networks, another name I'm watching here, showing relative price strength. This is a daily chart. It is up 1.5% today to 59.71. Looking at a swing point here of 61.17. 61.17 set earlier this month for Scripps Networks. They operate television networks like Home and Garden TV, the Food Network, the Travel Channel. Some stations there that enjoy nice viewership. So Scripps Networks could see more strength in this stock. Good technical setup here. Outstanding fundamentals as well at Scripps. Let's check in on shares of Alexion Pharmaceuticals. This is a name that I do not own, and I'm not going to own it, even though the stock is outperforming again, up 3.1% to 106.89. Recently firmed up at its 50-day moving average here. The stock is just a strong one, and it's an institutional quality drug maker. There's no question about it. Tremendous price performance, really strong balance sheet. Its key drug is Soliris, which is used to treat a couple different types of a rare blood disorder. But when you look at the weekly chart, this is just a classic example of a late stage base or a late stage run. In other words, you had a breakout down here in 2010, some more breakouts in 2011, and another breakout earlier this year. So once a stock goes through a series of technical breakouts, a breakout from a first stage base, a breakout from a second stage base, a breakout from a third stage, fourth stage, fifth stage, there comes a point where that run is going to end. So breakouts from late stage bases are vulnerable. After such a huge price move, I just think that the big money has already been made in Alexion. Doesn't mean it can't go higher, but if it does go higher, it can go higher without me. I'd much rather be in a name like Regeneron that we just went over, that is still in the early stages of a breakout and has not broke out from a series of prior bases, and that's what Alexion has done. So big price move, great company, but I'm going to take a pass for now. Some stocks not participating today. Some heavy volume selling in HMS Holdings. This is Health Management Systems. It broke below its 50-day moving average today. It is trading up near its session high, but still down $1.31, 3.7% to $33.95. Big volume in the stock today. Looks like some big investors are selling. I didn't see any news on HMSY, and also some very heavy selling in shares of Stratasys, SSYS. This is a maker of three-dimensional prototyping systems. Big downdraft for this stock today, too. If you were fortunate enough to get in to Stratasys when it broke out over $55 a share, thereabouts, broke out in July, you are getting some sell signals here. You could wait for it to see if it finds support at 56.71. Again, this is only if your entry point was around that 55 swing point. You can afford to be patient. The 50-day moving average is at 56.71. There's a chance it could find support there, but there are a lot of big sellers in this stock today as well. 986,000 shares, very, very heavy for this stock. So some institutional selling in Stratasys as well. When we come back, I want to take a look at MasterCard, another stock that's looking very, very vulnerable here, very tired, not a long candidate in my view. In fact, it could head even lower from here. All right, folks, headed into the final break. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing. Yeah, I wanted to check in on shares of MasterCard here, up $4.17 today, 1% to $422.50. This is really starting to look like a heavy stock, a tired stock, a stock where buying demand has been drying up for several weeks in a row. Keeps trying to rally, keeps failing. It keeps falling below its 50-day moving average. The 50-day line right now is at 427. So MasterCard is below that at 422, but I suspect that 50-day is going to continue to be a resistance level here, and I would actually go so far as to say that I think the chances for lower prices are better than higher prices for MasterCard at this point. So just an example where a lot of growth stocks are working in this market, MasterCard clearly isn't, and a lot of that has to do with just institutional selling over the past 2 or 3 months in the stock. Just doesn't seem to be a stock that institutions are interested in owning right now. So, folks, I mentioned that the Ultimate Growth Stocks model portfolio has been ramping up in recent weeks. I feel like it is well positioned here, starting to build some nice cushions in stocks that I believe have the good potential to be emerging leaders here. So if you want to check out a 30-day free trial to Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com. Ken Shreve's Ultimate Growth Stocks, 30 days free. I basically use a combination of fundamental and technical analysis when evaluating a stock. It's a lot more than just a bullish chart for me. I need to make sure there's a good growth story going on. I want to make sure there's a good management team in place. High return on equity usually tells me that. Need to see good earnings and sales growth in recent quarters. Need to see a consistent track record of annual earnings growth. So I'm very picky in terms of the stocks I select. And I mentioned earlier in the show that it's important to me to be in the highest quality stocks in an industry group. I do not buy weak price performers. I buy strong price performers. Okay, so it doesn't mean I buy every stock when it's at a 52-week high, but I tend to buy stocks that are showing relative price strength in the market, trading above key support levels, not below support levels. And institutional sponsorship is very important to me. I tend to target newer companies in the market, maybe companies that are recent IPOs, or companies that are 5, 10, 15 years old, still in the early stages of being discovered by mutual fund managers, and because I don't buy stocks that are over-owned by institutions. There are plenty of stocks out there, the Ciscos, the Hewlett-Packards, and the IBMs, and the Microsofts, where thousands of funds have a position in the stock. I like to buy growth stocks when they're still in the early stages of being discovered. So coming up next week in terms of economic data, we've got the second estimate to second quarter gross domestic product. That should be pretty interesting on Wednesday. I think the economy grew at a rate of 2% in the first quarter, and then the first estimate was for 1.5% growth in the second quarter. So we'll see what second quarter GDP looks like on Wednesday. We've also got the Fed Beige Book on Wednesday. What else do we got? Friday, Chicago Purchasing Managers Index, and a couple of interesting earnings reports. I mentioned Movado Group, MOV. That stock is having a solid day today. Shares of Movado Group right now up 3.5% to $28.72 ahead of its earnings report. Again, that is due on Tuesday. And then also the Fresh Market. The Fresh Market, that's going to be coming out with earnings on Wednesday. The stock is up 1.7% today to $61.54 ahead of the results. Folks, I hope you have an excellent weekend. Be safe. Don't forget to listen to the Tom O'Brien Show coming up next from 4 to 6 Eastern. Have a great weekend. I'll see you back here on Monday. Another edition of Breakout Investing.